Hello, everyone. Good morning, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 30-40 minutes, I'm going to be your host as we will be deliberating into the financial market, looking at things from a technical standpoint using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today, and of course manage our existing positions. So far this week we've had quite a successful experience so far, as we had how many we've been monitoring the US All Spot, the GBPUSD, and the XAUUSD. Though the US All Spot is still struggling to gain some traction, though we were able to capitalize on a rise in the US dollar following the CPI report, which came in hotter than expected yesterday, giving the US dollar a little bit of positive traction, and of course giving us an opportunity to scoop in some profit. And so today we are going to be looking at how well these assets have been doing, and at the same time prepare ourselves for both the London and the New York session today. And interesting enough, I was mentioning here yesterday that if we do have a strong CPI report, we will probably be seeing the likelihood of an immediate interest rate cut. If we see a high CPI report, we may likely see an extended high interest rate, which is what is gradually coming back into the market right now. So we are going to be trying to understand the current market dynamics using our price action to have a detailed understanding of what market participants are thinking, and of course use that information to position ourselves for the next move. And in preparation for today, I already have simple trading setups that we will be using today. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update onto that. So we will be expatiating on that one. So stay tuned in so you don't miss out on what we will be deliberating on today. And for those of you who will be joining us for the first time today, I'm very excited to have you around, and I do know that you will be wondering what this program or this platform is all about. Well, the Forex Morning Mastery was born out of a necessity to do follow-up details on my weekend videos. So during the course of the weekend, I usually share a couple of videos which details what my thinking process is as regards to the upcoming week. So during the Forex Morning Mastery, we usually come together here as technical traders to do follow-ups and reviews of our current trading positions in preparation of the New York and London session. And this happens on a daily basis, 9:05 a.m. West African time, 8:05 a.m. UTC. And it's most important for you to also understand that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and utilizing that information to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. And do not forget to always support the project by clicking on that thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm push the video to a wider audience of traders who may find this content beneficial, and at the same time help the community to grow. Thank you very much as you do so. So with that being said, here we will be moving right into the business. I see you, Jonah Aruna. Good morning to you. Glad to have you around with us this morning. All right, so with that being said, here we will be moving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the market sentiment today. And of course, we know that by checking on the economic calendar, it's a routine we normally do here, as we all know that these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing, of course, to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of this week, we have focused on economic features from both the United States and the United Kingdom. And yesterday we had a bunch of events, of course, which had a way of influencing the market participant. From the United Kingdom to the US, we had the higher low unemployment rate, claimant count rates, employment change, claimant count change, and of course the average earnings from the United Kingdom. And all of this data gave us an insight into the health of the labor sector in the United Kingdom. And from what we can get from the data that came in yesterday, it shows that the labor sector in the United Kingdom isn't doing very well at this point, and this has further necessitated the downfall of the pound sterling against the US dollar. And of course, we saw how the dollar took advantage of this opportunity yesterday, especially following the CPI data. So today we are going to be looking at that chart again to see how we can manage our current positions while we also strategically position ourselves for the next move. Then yesterday, one of the major headlines yesterday was the consumer price index, which came in at a phenomenal high, which further emphasized that inflation is still very sticky in the United States. And this is now changing the dynamics in the market, as majority are now swinging their bets towards a interest rate high for an extended period of time. Now, we're still going to be looking forward to what the Fed officials will be saying as regards to this development, which of course will still bring some uncertainty in the market, and we are likely going to be seeing some extended sideways trading activity today as well. Remember, we still have an inflationary data coming up tomorrow, that's Thursday, in the form of the producer price index, and we may likely see a situation where key players in the market will step aside for this event before making any aggressive bet from this point. So we are going to be taking all of this into consideration while we review the current market structure. So today, Wednesday, March 13th, we do not have any high impactful event coming up today. So what I did was to include the mid-tier economic features, and all we have here is from the United Kingdom. And if you look at what we have here, all the event from the United Kingdom has already occurred and happened this morning. So we had the industrial production, which gives us an insight into the movement in the volume of output for United Kingdom production industry. So this comprises the manufacturing, the mining, and the quarry and energy supply, and water and waste management sector. Now, if we get a high reading here, it's a very positive signal for the United Kingdom. And lo and behold, look at what happened here. The data came in below expectation. In fact, it was even below the previous month data. Now, we also have the manufacturing production, which gave us an insight into the manufacturing sector as well. We saw a contraction in that one compared to the previous month, where we had an expansion of 0.8. Now we had a 0%, so the manufacturing sector did not improve at all. Now, we also looked at the gross domestic product for this morning, the month on month, and this is a measure of the value of goods and services produced within the United Kingdom economy. And usually, if you remember, in the last 2 quarters, we saw that the United Kingdom contracted consecutively, which technically puts the United Kingdom in recession. But with the GDP data we got this morning, which came in at 0.2% expansion compared to the previous month of minus 0.1%, this is a positive stance at this point, though the expectation was 0.2%, and the market and the data came in just as expected, not bringing too much of surprise here. And I don't think this may likely affect the pound positively this morning. We are going to be looking at that in a moment. So these are the events we are looking forward to today, and they have already happened. So we are going to be looking at how the market has reacted to this event and see how we can position ourselves for the next move. Now, on the other side of the pond, that is from the United States economic docket, we do not have any event to look out for today. So we will be using our technical skills to position ourselves for the next move. Now, tomorrow we are going to be looking forward to a couple of high impactful events from the United States, and the anticipation of this event for tomorrow is likely going to be felt in the market today, as market participants may be a little bit wary of taking any aggressive bet, waiting for these data tomorrow before making any decision, and we may likely see an extended sideways trading activity today. So let's take this into consideration as well. And in fact, if we do not see any traction, we shouldn't get nervous or frustrated at all, as we understand why this is happening. So with the information we have gathered here today on the economic calendar, let's move right into the business. And as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And if you remember vividly, at the beginning of the week, we had this bullish projection where we were looking out for buying opportunity after identifying a range. Remember, we saw how price action was confined within the $77.40 level and the $76.80 area to emphasize the prevailing uncertainty in this market at that particular point in time. And of course, you know how we do it in this community. When we figure out a range bound trading structure like this, we exercise patience, waiting for the market to give us a signal in the form of either a breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And of course, we saw that most of the time price action was pending trading scenario around that resistance line, further giving us a clue that buyers may likely take over the market this week. And as a result of this, we positioned ourselves for bullish momentum, and in fact we had a couple of ascending trend lines to guide our trading decisions. But unfortunately for buyers here, you will notice that every attempt by buyers to move further lacked a follow-through, and due to this, we've continued to see price come back into our entry point, taking us out at break even at every point in time. And this for us is a signal that sellers may likely want to be continue the bearish momentum that started last week. Remember, we have been seeing price drop to the downside since last week, and since the new week has begun, you will see how the $78 area had played a major role in negating all attempt by the buyers, to continue the momentum. So at this point in time, things are looking very bearish right now, as sellers are getting stronger by the day. However, before we make any informed trading decision, we also want to take into consideration the fundamentals, which of course is driving the sentiment in this market. Now, yesterday I was telling us that we will be looking forward to the OPEC Plus report, monthly report, and it did come out, and the OPEC Plus maintained its previous projection, forecasting a 2.25 million barrels per day increase in global oil demand for 2024 and a 1.85 million barrel per day in 2025. And the organization also mentioned an optimistic outlook of economic growth extending from late 2023 into the first half of 2024, leading to a 0.1% increase in 2024 economic growth forecast. Now, I want to counterpunch this observation, this report. And one thing I would like to say here is that OPEC Plus report most of the time are not relied on by market participants. As we all know, that the OPEC Plus nations are intending to artificially increase the price of oil, and due to this, they will always push out a narrative that will cause a high demand for oil, which will definitely increase the prices of this commodity. And I think that what their report from yesterday is still lining with that particular direction. So market participant might not take this report too serious, and of course you will see from the chart, you will see that things are not looking as if they want to continue the momentum. However, despite the ongoing downward pressure, I still have the opinion that the bullish outlook still remains intact, only if we can see some structures broken to the upside, which we will be talking about in a moment. Then we also saw the API weekly crude oil stock reports yesterday, which unexpectedly dropped to about 5.521 million barrels in last week compared to the expectations, giving us a negative deviation of 0.4 million barrel. And this for us is an insight that this gives us an insight into potential inventory shortage in the oil market, likely pushing price upwards due to the unexpected increase and previous figures. Now, due to this shortage now, there might be concerns in the market as regards to supply, and due to shortage of supply in the market, definitely the demand will rise, and when the commodity becomes scarce, what happens? Price will also rise. So due to this factor here, I still want to give some room for bullish opportunity despite the continued bearish pressure we're noticing so far. So as a result of this, market participants will still be looking forward to the EIA report later today to further gain insight into the global supply dynamic in this market. Now let's look at things from a technical standpoint and using the fundamentals as a yardstick to guide our decisions. Now, the first thing you will notice here on the 1 hour time frame is the fact that the $78 area had continued to be a strong selling niche here, negating all attempt by the buyers to break through this area. And this is a red flag which informs us that buyers are losing the steam. And since yesterday, in fact through the Asian session, though we saw some buying activity during the Asian session, but price was unable to even come close to the previous high before the bearish momentum continues to the downside. So with the situation we have here, and in consideration and after considering the impulsive bearish move that started last week, we might likely be getting ready for a downtrend continuation. Now, if we are going to be getting ready for a downtrend continuation, where is it that we will be positioning ourselves for the next move? Remember, I shared with you yesterday that we have a couple of ascending trend lines which are supporting the intended bullish momentum, but unfortunately you will see that all of these trend lines have been broken to the downside. And you know how we treat our ascending trend lines in this community. As long as this ascending trend line maintains price to the upside, we want to be looking out for patterns and structures that support the idea of buying. But if price breaks down the ascending trend lines, then it is high time we start considering selling. Now, in addition to the breakdown of the ascending trend line is the fact that price action is now below our key level for the week, which is situated at the 77 $76.50 level. How you know how we use our key level? As long as price remains below the key level, definitely we want to be looking out for patterns and structures that supports the idea of selling. Now, another thing I didn't mention as regards to the fundamental is what is going on in the US dollar market right now. You can see in the last 24 hours following the CPI data, the US dollar has continued to rise, and the US Treasury bond too has also continued to rise due to the CPI data. Now, if considering the fact that the USOILSPOT is a US dollar denominated asset, the dollar now becomes much more expensive, and it becomes expensive, the demand will drop because other currencies will find the dollar very expensive to purchase and buy the oil, and this will lead to low demand. Now, this may likely incite a further bearish move. Now, to capture this bearish momentum, I'm looking at selling below the $76.80 area, which happens to be the lowest point for this week, and of course the support line of that channel we identified at the beginning of the week. Now, if price can break down the structure, then we are in to join the bearish move. But I'm still considering the fact that we can actually sell before the breakdown of this structure happens, making us to maximize the potential of that bearish move. And how do we do that? Well, since price action has broken down the last ascending trend line, and of course this key level at the $77.50 area, we shall look out for a retest of structure on our lower time frame, where continued selling pressure will confirm that buyers are finding it difficult to climb the structure. Then we could join the bearish move and then add more sell positions to our existing trade. So below the $77.50 level is a signal that we are within seller's territory, and it makes a lot of sense for us to join a bearish move to the downside. So that is how we are going to be managing our bearish bias on this asset, and the only condition that will make me buy the USOILSPOT at this point is for me to see price action break out of the $78.50 level. The reason why this is simply because of the barrier we saw here since the week has begun. We saw a barrier here, so I would like to see a comfortable breakout of the zone before jumping into any buy position. If we are lucky enough, we are able to see price climb back above this ascending trend line, and we see some series of higher highs and higher lows, then we could join before the breakout of that structure happens. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due or when I see such structure evolve on the chart. So this is my simple view on the USOILSPOT for today. I want to encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. So stay tuned in and use that time to mark out those levels on your chart. All right. I see your comment made on Hearth. Good morning to you. Trust you are doing very well out there. And there are no questions, no inquiries at all. So I think it's on this note. I take this as a confirmation that we are all on the same page. Good morning to you, Sekilo. How are you doing today? Glad to have you around with us this morning. I'm still seeing the likes are still not in tally with the number of people on board. We have over 9 people on board right now, and the likes are still reflecting 2 likes at the moment. Please, I need you to support the project. By clicking on the like button. You are actually helping the community to grow, as the YouTube algorithm will push the video to a wider audience of traders who may find the content beneficial to them too. And thank you very much as you do so. So with that being said here, and in the absence of no further questions, I want to assume we are all on the same page, right? And so we can just move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD, and as at this point, by now all your sell positions must have been closed at this point in time. As you will see, we're beginning to notice some buy pressure resume around this area, and in fact the lowest point for this week is been struck. Price action is struggling to break through that area, giving us what is looking like an higher low at this particular point in time. And the question right now is, are we going to be seeing a reversal setup evolve at this point, which could be the beginning of the uptrend continuation that started last week? Is that going to be the case? Well, let's look at what the structure is saying. And please do not forget what we said this morning as regards to the reports from the United Kingdom, which wasn't that rosy at all. Since the beginning of the week, we saw the labor sector not doing very well, the manufacturing sector not doing too well at the moment, and then we saw the GDP, which of course we saw an expansion after about 6 months in the United Kingdom, and this might likely be the beginning of another phase of recovery for that economy. So are we going to be seeing the price rebound from this development, or how are market participants going to react to the situation, especially when the US Treasury bond yield is doing very well at this point, resulting into a performing US dollar following the CPI data from yesterday. Now, if we look at the current structure, now before I go into the details here, I want to reiterate that we only treat the 1 hour time frame during the Forex Morning Mastery. Now, if you do want to have a background knowledge of how we got to the point you're seeing here on the 1 hour time frame, then I encourage you to watch my weekend videos where I did a top-down analysis on this asset. And if in any way you missed out on these videos, you can check the description box below. You'll find the links to all of the videos, all of the assets we are talking about today, where I did a top-down analysis via the higher time frame right into the lower time frame, and it could be an educational guide for you in understanding how to use price action. So let's get back to business. So as at the beginning of the week, we have been selling the GBPUSD, where we did capitalize and took advantage of how many positions we had. 1, 2, 3, 4 sell positions since the beginning of the week. Now let's quickly run through how the week started and what led to the decisions that we sold this asset. So at the beginning of the week, we identified a range where price was confined within the 1.28650 level and the 1.28450 area to give us an insight into the prevailing uncertainty at that particular point in time. And you know how we use our range bound structure. Whenever we identify them on the chart, we exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And of course, as you will see, price did not come close to the resistance line, hereby negating any idea of even considering buying at all. So it was more of price trading close to the support line, and during our live session on Monday, we saw price break down the structure, and I did emphasize that for those of us who missed out on that opportunity, that we should see price come back, retest the structure to join the bearish move. And since that moment, we have been selling this asset, as we had our first sell position triggered right here. Then we added more sell positions at the breakdown of the 1.28250 level, the 1.2800 area, and as at yesterday, we added another one at the 1.27760 area. So all the three positions did it very well, but the fourth one at the 1.27760 went into stop loss. But at the end of the day, we are still on the positive side of our portfolio on this particular asset. And for those of us who capitalized on this opportunity, well done and kudos to you. So as we head into today's London and New York session, how do we intend to manage our position on this asset? Now, remember what we said here yesterday. The structure from yesterday's live session still remains intact, as we still have this descending trend line in play, as price action is still trading below the descending trend line. And you know how we use our descending trend lines. As long as price remains below the structure, we would not be considering buying at all, and the only condition that will make us buy is for this descending trend line to be breached and broken to the upside. And one interesting thing about this descending trend line is the fact that it also shares a beautiful confluence with our week's key level at the 1.2800 area. Now, you know how we use our key levels. Of course, we want price to break out of the key level, looking out for patterns and structures that supports the idea of buying. Now, if price can break out of both the descending trend line and that key level, this could likely welcome buying opportunities. And of course, it's looking as if buyers are trying to take over this market, which is surprising to me at this point in time, considering the CPI data that came in yesterday. Now, I don't know why buyers are coming in at this point, but this is what the market is saying, and we have no other choice than to listen to what the market is saying. Now, the first thing you will observe here is that the lowest point for this week is at the 1.276 area. Sorry about that. So the lowest point for this week is around the 1.27600 area. As you will see, this happened during the New York session yesterday, and the following attempt by the sellers to continue that momentum was stalled around this area at the 1.27760 area a couple of hours ago. And you know how we see this kind of situations when price action finds higher low. It shows us that buyers may likely be gaining some momentum behind the scenes, which could result into a reversal pattern. And if we take into consideration the bearish momentum that started last week Friday, following that strong impulsive move we saw, we may be seeing the beginning of a reversal pattern in the form of a double bottom structure, where the neckline of this pattern will share the same space with our key level at the 1.2800 area, which I did mention earlier shares a confluence with that descending trend line. Now, when we have a reversal pattern, all we want to be doing now is exercise patience and wait for the validation of this reversal pattern, which obviously will come in the form of a breakout of the neckline. Now, if the breakout happens, we are very much good to go on the uptrend move. Now, there are two ways to which you can capitalize on this opportunity. Now, for those of you who have been profitable so far this week on the GBPUSD, you can afford to place a buy stop order above the 1.2800 area to test waters and see if this momentum is going to happen. Now, what this simply does is that we are only leveraging on the profit we had made so far this week. So we are just risking some of the profit. If it doesn't work, we know that we are only risking some of the profit we made. However, if you are new with us and this is your first time taking a pound sterling position against the US dollar, well, I would encourage you, since you do not have something to leverage on, exercise patience and wait for confirmations to happen in the form of a breakout retest of structure before jumping into that bullish momentum. Now, another thing we also want to take note of here is that if the bullish momentum continues, please note that we have some structures here that could serve as a barrier for the bullish momentum. Now remember, for those of you who watch my weekend video on the GBPUSD, remember the ascending channel we identified on the higher time frame. This is the resistant line of that ascending channel. Now if price continues to climb and continues to move, well, as soon as it gets into that area around the 1.284 and 1.285 area, please, we have to move all our stop losses, secure the current buy position, and wait to see how the market is going to be reacting to that trend line. Now, if continued selling pressure persists around that area, that is, buyers are finding it difficult to break out of that structure, we may be seeing the breakdown and completion of the retest of the structure to incite a downtrend move. So we should ensure that all positions are closed as soon as price tests that zone. However, if price action breaks out of that structure, then we are good to continue the momentum to the upside. So this is my simple view if ever price action breaks out of the 1.2800 level. Now, if this is not the case and the contrary happens, that is, price action drops to the downside, then we will be seeing the continuation of a downtrend. And as a result of this, I currently have a sell stop order right below the lowest point for this week at the 1.276, while I will be waiting to see if I can actually join a bearish move before the breakdown of that structure happens, just to maximize the potential of the bearish move. So I'm going to take this one out right now. So if we see selling pressure around this area, that means that price wants to respect the descending trend line, and any form of double top structure or reversal pattern there, breakdown of the neckline will welcome selling opportunities, so we can join earlier than the breakdown of the 1.276. So you can see how crucial that descending trend line is, as it's going to be playing a major role in helping us position ourselves for either a buy or sell today. So I encourage us all to mark it out on our chart, and of course the 1.28 level, our key level for this week, so that we can use them to guide our trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5, 10, 15 seconds off and see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard we can move on to the next asset. I'm still yet to see your likes. For those who had clicked on the like button, thank you very much. I really appreciate your support. And for those who are yet to like, it doesn't cost you anything. This is the cheapest way you can actually support this project. So we have over 10 people on board, and the likes we have are way below that. So let's make the like tally with the number of people on board. So click on that like button, and thank you very much as you do so. So with that being said, here let's move on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And what an interesting situation we have here this morning, as we still have all our sell positions active. We have about 3 sell positions running at this point in time, where the first 2 are doing very well, while the third one is currently running in a loss. And for those of us who capitalize on this opportunity, well done and kudos to you. Though this week was not void of challenges too as well. Remember, at the beginning of the week we were buying this asset, which unfortunately went into a loss, as you will see here. So at the beginning of the week, it was more of a range bound trading activity, where price action was confined within the $2,189.50 level and the $2,175 area, to emphasize the prevailing uncertainty in the market at that point. Though the range was the support line was around the 2,177, remember, so we had to extend the support line further into the 2,175 when that range expanded. So we adjusted this yesterday. And at the beginning of the week, when we saw how buyers were negating all sellers' attempts here, we decided to join a bullish opportunity. That is, we wanted to actually buy before the breakout of that resistant line will happen. And as a result of these expectations, we had a buy stop order above the 2,182, which got triggered, but unfortunately yesterday we got taken out of that position in a loss. Now, during our live session yesterday, I was beginning to suspect that sellers are trying to push price to the downside. As you will see, despite hitting a high here this week at the $2,189.50 level, we saw that the subsequent attempt by buyers to continue the momentum failed, as we continue to see a series of lower highs. And during our live session yesterday, I did emphasize that we are likely going to be seeing this whole range bound trading activity transition into a reversal pattern. So as a result of this observation, we decided to capitalize on a bearish move right below the structure, and we saw price trigger that sell stop order right before the CPI data. And of course, following after that, we saw price significantly drop to the downside in response to the US inflation report that surpassed all market expectation, which of course led to the rise in US Treasury bond yields. And you know how the US Treasury bond yield is directly proportional to the US dollar. So if the US Treasury bond yield does very well, it is very likely for the US dollar to follow suit, and this has resulted in a positive traction in favor of the US dollar. Now, with the situation we have here, we had 3 sell positions triggered. The first one was triggered at the breakdown of the 2,175 level, as you will see right here. And we had a second sell position triggered at the 2,166, and we had a third one triggered here during the later part of the New York session, and of course it's still running, but the third one is in a loss at the moment. So the next thing we are going to be doing right now, since price action had moved significantly well in our favor, is to ensure that we secure all the current sell positions, and the most appropriate area will be around the second entry, while we give enough breathing space for price action to move around. Now, with the current situation now and with a well secured position, what are our chances today? Well, during the Asian session, we witnessed some buying interest in this market, pushing price to the upside, but the upward momentum lacks conviction at this point, and this may be because market participants are waiting for the clarity on the federal rate cut part before committing to new aggressive position. So since the unexpected rise in US consumer inflation has raised speculation that the Fed may maintain rate higher for a longer period of time, the path of least resistance is looking bearish at this point. And if we consider this and consider the fact that price action is within an all-time high zone on the gold market, profit-taking activities following an all-time high is also something that is a possibility as well, which we cannot ignore. And coupled with the CPI data, I think the path of least resistance for gold is to the downside. So we shall continue to look out for more selling opportunities on this one. However, we cannot ignore the factors that will be stabilizing the gold prices, that is limiting the downside of gold. Now, the geopolitical tension is still there, and we know this kind of geopolitical tensions usually incite an appeal for safe haven assets such as the gold. So we cannot ignore the limiting factor behind this. So while we're still looking out for more selling opportunities here, as soon as price moves significantly in our favor, let's ensure to move stop losses to secure the current position, as we could still see bullish traction come in at any point in time. Now, for those of us who missed out on this third position here, you can still place a sell stop order below the 2155 level to capitalize on more selling opportunities. And if price continues to drop, breaking down the 2143, we will be adding more sell positions to maximize the bearish move. However, if price drops into that 2143 area, I want to be very careful around this area, as we may be seeing some bullish traction happen there today. If you watch my weekend video on the XAUUSD, you will see how significant this $2,143.57 level is on the higher time frame. This level was a very strong selling niche, I think, at the beginning of the year, before we saw the breakout of the structure happened last week. And technically, when price breaks out of a key structure like this, we expect at some point in time price may come back to retest the structure in an attempt to continue the uptrend move. So let's see how the market will react if it ever comes close to the $2,143.50 level today. Then another thing I would like to mention here is the fact that market participants will be anticipating the producer price index and the retail sales data coming up tomorrow. Producer price index is also another inflationary gauge which the Federal Reserve officials will be looking at to guide their interest rate cut path for the year 2024. And now, due to the anticipation of this event tomorrow, we might likely see a choppy market condition evolving into an extended sideways trading activity. So we shouldn't get surprised at all. Now, if you are a cautious trader, you might want to stay out of the market today. If you are a very cautious, conscious trader, you might want to stay out of the market today because of the possibility. But one thing I would like to say here is that let's keep ourselves open as possible. If we capitalize on opportunities, if we see new opportunities, let's take them. We're already profitable on this asset this week, and we can afford to risk some of the profits we have made so far to test waters and see if this position is going to work. So at this point in time, we maintain a bearish bias on this asset, looking out for more selling opportunities at the breakdown of the 2155 and the 2143 $1.50 level. Now, in as much as we are looking out for selling opportunities, we cannot ignore the potential of the uptrend continuation. This may be the end of the retracement move of that bullish impulse leg we have been enjoying in the last couple of weeks. And for us to know that this is the end of the retracement leg, we want to see a reversal pattern which is yet to form at this point in time. But if we do see any form of reversal pattern, I will definitely give you an update on both my TradingView and Telegram platform. So I would like to see any form of maybe double bottom structure, head and shoulder pattern, then we'll mark out the neckline and then buy the breakout retest of the neckline. So at this point in time, I'm yet to see any form of reversal pattern yet at this point. But let's see if the market will break out, retest the 2166 for buying opportunity. I don't know yet, but if anything comes up, surely I will be with you in the comment section. And don't forget to click on the link right in the description box below. I already pinned the link to the XAUUSD live window session right there. So you want to click on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who do not know what this is all about, well, the XAUUSD live window is a platform born out of popular demand from members of this community, where we come together during the New York session to monitor real-time price action on the XAUUSD, and it starts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours depending on the volatility or the strength, the volume of trading activities for that particular day. So let's see during that session too as well. Click on it, click on the notify me button, and you will get notified as soon as we come on live. So this is my simple view on the XAUUSD. I'm yet to see your likes, guys. We have over 11 people on board and we only have 7 likes. So let's make the like tally with the number of people on board. Please, if you have found this content helpful and useful in making your independent trading decisions, kindly give the video a thumbs up. So let's see if there are any questions whatsoever before we start rounding off on today's Forex Morning Mastery. So I will take the next 5-10 seconds off to see if there are any questions before we start rounding off. All right. So in the absence of no questions, we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate your support, your likes, your presence, your energy this morning. You guys are just too wonderful. So today we were able to take on the 3 assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and finally my favorite asset, of course, the XAUUSD. And we were able to identify simple trading setups that we will be using to guide our decisions today. So I do hope you marked out these levels as we illustrated during the course of the session. If you had done so, well done, kudos to you. So all we need right now is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess. Hence, you want to be making sure you have a well-defined risk management strategy in place. For those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed during the course of the session. And if you did, you want to be part of the subsequent editions. Trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you. Same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for tomorrow's trading session, which promises to be another exciting one as market participants look forward to macroeconomic data from the United States, which obviously is going to be bringing some more traction into the market, and we do want to be on standby to capitalize on that move. So don't miss out on that session. So it's on this note I wish us all the best of luck today. I will continue to give you updates on both my TradingView and Telegram platform as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.